Friends, how are you? This is Igor Pechkovsky with Windermere Bellevue Commons, your trusted advisor, real estate professional on the east side Seattle metro area. Today we have October. Can you believe it? We're heading into Halloween and the end of the year, and we have another market update for you. I have a lot of information. I feel like today we'll talk about many different things. We'll try to make it quick and easy, but let's see what we've got. We will get through numbers, east side Seattle, Snohomish, as always we do. Then we will talk about interest rates. There are quite a few things to say there. We just had a Fed minute notes came out, some clues that they give, and we'll try to make a short-term prediction of what's going to happen there. And in the end, I always try to bring information to you in a just very simple fashion. I'll tell you what can you do about it. If you're a buyer, if you might thinking about buying a home in today's market, what are the tips that I advise my clients to do? And if you're the seller, same comes to you. Like what expectations can you have, and what do you need to do when you're selling the property? So we'll try to wrap it up. Hopefully under 20 minutes. Let's see how I do. Let's go. Friends, so first things first. As you probably realized, I'm not a huge YouTuber star by any means, and I'm not ever planning to become one. However, I would like you to like this video and subscribe. If you find it useful, share it with your friends, put a comment so I know that someone is watching it. And if you're one of those people that are just looking for negativity and all the bad news, it's not what this channel is for. I don't care about clickbaits. I'm just sharing what I see because I practice real estate every single day, including weekends. I share what I share with my clients, what I see is happening and how we go about it. This is what this channel is for. So if you agree, if you're in the market, if you like this video, please comment, please put your, heads up. And without overdue, let's get into numbers. Let's start with the east side. Let's go. Okay, so let's start with the inventory. As always, we could look at the graph right here. 1.9 months of inventory. We had seen a slight increase from what? From the last months, we had a 1.6, now 1.9. Good news if you were the buyer. At the same time, I always say the same thing. There is still very little great inventory. We've got inventory. We're looking for fantastic inventory, right? So bunch of homes that hadn't been updated or maybe had been rentals for a while or so on entering the market. Still good stuff. But when it comes to finding really, really nice homes, and I have motivated buyers that are looking, still been quite challenging. But at the same time, we definitely have more options to choose from. Median, this is where things are interesting. All of you that are waiting for it all, like to become, $500,000 homes in Bellevue, you probably keep waiting. But we've got 1.35. It's the same as we had last month, right? So we had this huge decrease, the interest rates, and I'll show you something in a minute, decreased the prices from 1.72 in June all the way to 1.35, and 2 months in a row, it kind of bottomed out at 1.35, which is a still 3% increase year over year. However, I just have a feeling, if you watch my videos before, I said that my prediction is that we're gonna floor at 1.3. With the interest rates the way they are, we're probably gonna break through that floor when the numbers of October will come up. I think there is the good chance that it will be under 1.3, so prices actually, percentage will be negative. But so far, months over months, we're staying consistent at that 1.35, which still appreciation of 3%. Next, my favorite, prices over asking. Yes. Months over months, we still have homes that sell over asking. There are 13% of them. There is absolutely more homes that are getting price reductions. As you can see there, 9% sell in full price, 25 below list price, and then 53 of them, this price change before the sale. So they might drop the price a bit, and then when they went pending, they went a little bit below again. But at the same time, guys, I always say the same thing. Every buyer looks for the best property possible. the best properties still get multiple offers even with today rates. 6 days on the market, it's very quick, right? And 18 days, that's when you get to that 18 days, this is where price start to change, but we're still doing relatively good on that. And this is the one, if you're the seller, you could see that you get full price under 15 days on the market. When you cross 15 days to 30 days, the percentages start to shift. You go to 93% and 96%, median to the last list price. If the property is being on the market over 30 days, you're probably looking into, 10% value reduction when it comes to the list price. So pricing the property correctly is a huge thing, and the numbers, tell the story. So now, folks, look at this slide. It's a big one. It's an important slide to understand because even I know this stuff, but when I look at this, I'm like, yeah, of course it makes sense. So the cost of waiting per year, you have September 21 to September 22. Last year price a little over 1.3, today 1.35. So we're still 3% higher, still appreciated, but it's not the point. The difference of interest rates from 3% to 6%, which, by the way, that was in September. Today's rate is almost 7%, which is even more expensive, right? But the difference on the monthly payment is $2,700. Let's make it a $3,000 for the same price. $3,000 difference on the monthly payment makes a lot of real estate unaffordable. That is why if you have such high interest rates, that price came down from 1.7 to 1.35, and we'll talk in the rates in a minute. If rates continue to go up, of course, it will have to correct pricing even more, because $3,000 a month is a lot, and it's not even it's part of the mortgage payment, but compared to what it used to be, like we're looking at $8,200 a month. That's a lot of money, right? It's very, very, very expensive. So when you actually look at those figures, that's what the Fed do. They increase interest rates to correct prices, and in fact, it's working. And for that reason, I told you before that my floor number was 1.3, but right now, we're probably gonna break through that floor. So let's look. I just wanted to show this to you because I think it's very important to understand and see. Let's look through Seattle. We'll bombard through numbers without too many comments and go directly into interest rates. All right, my friends, Seattle. So Seattle is quite interesting. Inventory current level is at 2.1 of a month, right? So there is enough inventory for 2 months to be in the market for everything to sell off. Last month we had 1.4. So it is quite drastic increase compared to the east side. The prices are still up, as you see. There is still 6% up year over year. Last month, the median was at 927, today at 900. So, as you know, I say it in every video, I was making fun of Seattle not appreciating, as quickly as the east side was over the last year and a half. But today, it doesn't drop value as much as the east side corrected, right? So the prices are very consistent, still, at 900K, still up 6% year over year, even with the current interest rates. However, there is more inventory. I think we'll see what the next month looks like. So over asking, we still have 19% of homes sell over asking. Great properties in Seattle. There is good demand, even with more inventory. There is lots of demand in Seattle apparently. So the average days on market is 7 days, and median difference from list price 3%. So when I say multiple offers, it's not 12% like we used to have, or 15% over asking on median, in 3. So it's relatively, maybe there are 2-3 offers. People escalate a little bit, waive a few contingency, make an offer very clean and smooth, and get a property. That's what usually we will see in the normal market, which that's where we're heading right now. All right, that's on Seattle. Let's go Snohomish. Take number 3, but you don't know it. Let's talk about Snohomish. Snohomish is doing just fine. Some of you said in the last video Snohomish crashed. It didn't really. Maybe there are some homes that were overpriced, whatever your experience with Snohomish County is doing just fine. So there is more inventory. 1.7 of a month used to be 1.3 last month. There is definitely more inventory. So the prices are at 735 where they used to be 749. So 14K price reduction, not a big deal. We're still 9% up year over year. All right. So before and you say, wait, Igor, just wait. Like it's all gonna I'm with you. Like interest rates will correct the market even more, right? But when we're still up 9% after the massive reduction of values we had, after the monthly payment is $3,000 more expensive year over year, we're still 9% up year over year, right? You just have to see our market as it is. It's a very strong market overall. I'm not talking about the rest of the country, I'm talking about it here. So Snohomish is doing simply just fine. 16% over asking, 9 days on market on average for the homes that sold, for above the list price. Below list price, 16 days. Guys, it's only 16 days. It's not 5 months. Number of sales. Anyway, numbers for Snohomish look just fine. It's a Snohomish County. Let's go into next, me mumbling over interest rates. So before I can't actually say that word. There are a lot of words I wish I could say, but I can't. Before you disagree with me and crap on everything I say, you gotta remember a few simple things. One, pending sales are down almost by 30% year over year. In the plain English, there are 30% of offers being made. There are 30% less of buyers that are on the market today. These buyers didn't move to Texas. They didn't disappear. They didn't go with Elon Musk to the moon. They're here. They're just waiting. You got to remember that. So we have more inventory, but the buyers are being on the fence. They're not making offers yet. They still want to buy. They still don't own the home. They're still paying rent, which is a lot, but they're waiting. As simple as that. You have to remember that. And most of them are waiting for someone to just say, guys, you can buy now. The rate's not going to go any higher. We hit the floor of the price. And when that happens, I bet you $100 that I will make that video. I don't know when, but when it happens, we will see even stronger appreciation that we have, and you will see multiple offers again. When it happens, let's talk about interest rates, but that's a fact. And to support my point, which you will disagree again, I made an Instagram story, and here's the picture. And here I'm trying to have a little bit of fun. But I made it and I said, buyers would rather bid in multiple offers rather than be the only bidder, so they feel validation for making the right decision. Agree or disagree? And my Instagram following, all my friends actually confirmed that most of the people would rather be in multiple offers than to make a decision for themselves and just bid when the market is in this situation. So the reality is you have to take advantage of it, or you could wait and bid with everybody else. Those are my two thoughts. Let's move on to interest rates. Friends, I see I have to cut it short. So long story short, the rates today are at 7%. They probably might get even more expensive. That puts a lot of pressure. Fed is putting a lot of pressure to slow down our inflation, right? To slow down the spending, to correct the market. So in their notes that they came out on Wednesday, I believe, 2 days ago, they say that through 2023, we shouldn't wait for, them to pivot on their interest rate increase strategy. That's what they say. I'm facing it as a reality that's a reality. I don't think we should see rates under 5%, at least in a short-term spectrum, right? And these rates will dictate the market in months to come. So we shall see how it shall play out. At the same time, there are 3 reasons why they might pivot from their strategy. Reason number 1, if we will see inflation start falling drastically, unlikely, but reason number 1, let's say that inflation numbers will go to 4%, and today they're a little over 8%. That'd be a reason for them to start dropping rates. Number 2, if they will see unemployment rate is going up, because you have to remember our unemployment is like at 4%. Everybody's working, like it looking good, right? Which is a strange thing to see. But number two is, if we will see, unemployment rates are going higher and there will be a lot of unemployed people, they will have to move that, change the strategy. Number three, I believe it'd be to corporate financing. So if companies cannot get financing anymore and they will start laying off people in big numbers, Fed will have to pivot their strategy and change, and start dropping interest rates, because there is the high chance that with the rates as they go right now, and I'm telling you, I realize this, we probably should hit a recession in 2023. But recession is not all bad news. I know. If we would have a recession in 2023, it's not quite a recession that you remember of 2008. 2008 housing brought recession, right? Like the system was fraudulent. We talked about it. So in this case, usually housing would do well through recessions, even if we have one, because guess what? Then Fed will decrease the rate. In 2020, they slashed federal rate to 0. What did that do to our local real estate, right? So obviously there were a lot more money printed and all of that. But still, when a recession happens, rates usually decrease, which prompt our markets. And with that 30% of buyers, they're still being there, I'm an optimist to say that our market overall will weather whatever has to come just fine, because you have to realize what Fed cannot change with the interest rates. They cannot increase supply. They cannot get more land, and that's very important. There will be no new land. The regulations to get a permit to build something in Bellevue takes 1 year. It takes another 1 year to build something. It takes 2 years to build one house. Fed's not gonna change that. The labor will be expensive. The materials will be expensive. So there is no new supply of housing come to satisfy the demand. They are just correcting the market with this very high interest rates, and it's working because, right, it must be more affordable. It cannot be 1.72 million. But at the same time, I personally don't really see, even if we do have a recession, for the reasons I mentioned above, how it will just bring end of the world to our local economy. Friends, I know that last segment I mumbled a lot, so please comment if you got through it, if it makes sense, or even if it doesn't make sense, if you disagree. I'd be happy to read your comments. But if you watched this video in its entirety, please let me know that you did. Even one person, it would make my day. So I'm gonna wrap up this video with tips for the buyer, for the seller. What can you do about it all? Buyers first. Number one, you're not buying an investment property, you guys. I know you want to time it. I know houses and investment and all of that. You're buying a house. Focus on the house. That's my advice to you. I always say the same thing. I bought my home about 1.5 years ago. I have reserves in my bank account. I can pay for my house, right? I love my home. So as long as you find the home that you love and can afford, that's all that matters. Because in the end of the day, I have to sleep somewhere. I have to go somewhere. I have to cook somewhere, right? You're buying a house. You must like it. You're gonna stay there for a while, right? I have to go sleep somewhere in my bed. And I don't care how much it's worth, as long as I can afford it. And I do believe that we will see appreciation when we get out of those high interest rates. It's a matter of when. We're still up 3% and 9% respectively. So tip to the buyer, focus on the home, find the home that you love. Next, tip for the seller. So tip for the seller, if you are considering selling your property, please call us. That house must be perfect. That house must be in top 13% of houses. Top 13% still sell over asking. There is the reason why. It must be taken care of. It's worth spending a little bit more and refresh the home, paint, take care of the property, make pre-inspection. You have to price it not just right, you probably have to even underprice it a little bit with tomorrow's price in mind. Because if you don't do it, if you just hire your niece, whatever her name is, if she does not practice real estate, it will be a lot of pain and misery, a lot of many days on the market and price drops. I pretty much promise you on that. So hire a professional on both sides to guide you through this process. Anyhow, you friends, this is your trusted real estate advisor. I just really, sorry if I took a while, maybe with this passion, just want to share this information. That's what I see. That's what I do and want to share with you. Call us. I'm not a YouTuber, as I said. If you have any specific questions about your property, or you want thinking about going on the market, or thinking about buying, I also work on the investment multifamily properties. Just give me a call. Would be happy to connect. Please say hello in the comment section, and I'll update you next month on what is happening. Thank you very much.